Hello, everybody. July 21st, 2015. I was sent this article today and I wanted to do a video on it. This video is not going to be about my opinion. It's actually going to be about your opinion. I would appreciate a comment down below. If you've been following my channel, I'm sure you're aware of my opinion or what you imagine my opinion would be in regards to this article. So I'm just going to go ahead and run through it real quick. I know you're all capable of reading it, but some people drive a lot like I do and just appreciate someone reading a piece of information and they can listen to it for a few minutes in a YouTube video. And so, they don't mind someone reading them something. So anyhow, I'm just going to run through this real quick. I also am going to take off the ratings for this is probably the second, third time in 5 years on a video, because this is not about thumb up, thumb down. It's just a piece of information, and I would really like to have a good discussion down in the comments section. So let's run through this real quick. Why gold is falling and won't get up again. The precious metal will rally again, but not with the same glitter. So here we have a gold coin and a Bitcoin. And this is by David Wiedner, and it's been put on Market Watch just a few hours ago. So do you remember gold? It was kind of an analog Bitcoin. It was a universal legal tender. Governments held it in forts. Your bank kept it in a safe. It was the most precious of precious metals. And investors bought gold for safety's sake when markets and economies crashed and the value of paper currency was in doubt. But that was a long time ago. Gold is down 40% from its financial crisis peak in 2011. As Jeff Reeves notes in his column Monday, the long-term trend remains decidedly against gold. Reeves honorably calls himself a gold agnostic because he doesn't want to get into conspiracy theories and some of the nonsense that surrounds the gold market. He wants to talk about the investment. I want to talk about the investors because I don't think it's possible to separate the two. Gold has always been the favorite commodity of a fringe crowd that doesn't trust governments, central banks, politicians, and the financial system. This part of the gold market drives a lot of the buying and selling. It whips up a lot of frenzy. I don't have any hard evidence, but I'd argue that gold's value is inflated by people who aren't investing in a commodity, but in a belief system that may or may not include black helicopters and a U.S. invasion of Texas. What is different is how deep and long the gold bottom could go. The sad part is that gold always has been a sucker's bet. It's supposed to protect against inflation. It doesn't. It's supposed to retain its value. It doesn't. For those reasons, gold is supposed to be the ultimate currency. It's not. As fund manager and blogger Barry Ritholtz said of gold's fundamentals, it has none. Wall Street, of course, welcomes the business. Gold, after all, is hardly a useful commodity. If it had significant real purpose, it wouldn't be sitting in vaults around the world. But hey, we'll trade it. We'll trade anything. By and large, these special breed of gold bugs have ignored history. In the past century, gold has bubbled and popped at least a half a dozen times, with crashes coming in 1915 to 1920, 1941, 1947, 1951 to 66, 1974 to 76, 1981, 1983 to 85, 87 to 2000, and 2008. If many of those dates seem to have a common thread, it's because they do. They were, for the most part, periods of economic expansion. Who wants gold when the stock market is booming and housing prices are soaring? Fundamentally, today's gold market is no different. Stocks are holding near all-time highs. Interest rates could rise before the end of the year. Gold, on the other hand, is slip sliding away. What is different is how deep and long this gold bottom could go. As we move into an ever techier world, gold has more competition, namely cryptocurrencies, such as Bitcoin, that cater to the new generation of skeptics. The Bitcoin market touts itself as an alternative to the currency markets and a hedge against inflation. Bitcoin's value, like gold, is based on the confidence of the buyer. Nothing more. May I repeat? Nothing more. Cryptocurrencies may also even prove to be useful, at which point they most likely will be unattractive to bitbugs. This isn't to say gold trading will disappear. It's just that there's more competition. In the near term, many asset classes, including real estate, bonds, and stocks, are producing or poised to produce better returns. And in the end, even gold bugs want profit over protection. When the cycle turns, gold will have its day again, but as alternatives emerge, that day will be less bright, less shiny. Please leave your comment down below, and we'll have a good discussion.